Class in session, lines pay attention. Professor Manilow, juice is the lesson. Charts don't lie, numbers show the way. Kimba gang minds turn data to the pay. Grab your notebooks, mark your lines. Patience in the jungle is how we shine. Knowledge is power, math is the key. Every young line gon' learn from me. If lines can't do it, homie, it can't be done. Work, sweat, and grind, the journey just begun. I'ma elevate the game, show you how it's won. Prepare with the wisdom lines, trades gon' run. Kimba. Pressure in the candles, the market makers is frontin'. We see through they scandals, price is the box and we puntin'. Bugatti money focus, flexing on my mind. Structure, fibs, and order flow, profile, and volume in time. Hyena try to laugh, but the lines gon' feast. Feast. Nerd out to take the battle from LeGuiney to Wall Street.
Let's go. Let's go, let's go, let's go. How we doing? How we doing? How we doing? How we doing? Who juicing? Lagona. Here we go now. Let's go, LaQuinia. Let's get it. Let's get it. Happy Wednesday. Happy FOMC day. Let's go. Let's go. Let's go. Jamaica, Yurtik, Shadow Dancer, Morty, QR Project. Hey Blade, how we doing, brother? J-Bucks, Daydream, Mark, Cage in the chat and in the cameras. Big shout outs to Cage and Husty joining the stream today for the big day. I am psyched. Who's ready? Are we exclamation prepared? Let's go, let's go, let's go. Let's go, boys. Thank you for being here with me. This is juice. This is juice. The levels are the levels. The math is the math. The retests are the retests. Goodness gracious. How about that level? Ooh-wee. I mean, we lost it and... Cachoya! Yeah, but to the downside. To the downside, too. We're still holding that 110, 111 zone, so that's good. And I don't even want to talk about ES. Lord of mercy. It's unstoppable shitcoin America. Fuck yeah. Let's go. Liamzi. Autocar. Dr. Manhattan. Let's go. ResQQ. Fibception. I got all 100 of my iPads running, and we got 27 people in the chat. So let's go. Thank you for joining us this afternoon, Lions. I know it might be a different time than usual, but we got to get it because we're going to be here for JPZ. Who's got your purple ties on? Who's got your helmets and spacesuits and diapers on? Because I know I do. I'm dressed for war, son. I mean, dude, how are you going to say at the desk? You can't even see it, but I'm wearing camo. Let's go. We're soldiers and we ready for war. Let's go. Shoutouts Curvies. Shoutouts Cage. Yep, I'm joining you in the diaper gang. Let's go, boys. Yep, spacesuits, helmets. Let's get some music going. They can't hear us? Oh, son of a bitch. Thank you for telling me. Wait, can you speak? Yeah, it's not showing. Cachoya. Holy shit. Yeah, I'm the stream destroyer. No.
Major Cachoy.
Oh, I think we got you.
Kachoya.
Yep.
Test net. Do you hear Cajun Houston now?
Can you hear us?
Chat.
Testing.
Kachoya.
Y'all, I like drove at Mach 400 home from work to get all my system set up. I don't even have my like test headphones on, so sorry for the technical things. But we are Gucci with Cajun Houston now, right? How we doing? How we
doing?
Big shout outs to these boys.
Shout out to Manilo.
Big shout outs to Cajun
How we doing,
Houston.
y'all?
Thank you guys.
Guys, you guys want to start some of those KCEX giveaways? We're giving out $5,000 KCEX giveaway today. You guys ready to get some giveaways?
Yeah, we've been planning for this, the giveaways.
Let's do it.
Yeah, if you haven't gotten your UIDs in the dashboard, make sure you do that ASAP. We doing this.
Hey, as soon as that music cues up, let's give out some money. Let's do it. Hey, happy FOMC, happy Wednesday. Big shout out to Manilo. Let's go. Acha.
Yeah, we gotta get some music going up in here.
Y'all ready to give out some money on KCEX? Hey, make sure you guys have your UIDs updated in the dashboard. Exclamation dashboard. Exclamation KCEX. FOMC vibes. Let's go, y'all. Much love.
I just blasted everybody's ears in. Daydream, yeah, that's a little delay how we've had the feed in for the multi mics. I gotta try and get this test headset.
Explanation point Wednesday juice.
Exclamation point Wednesday juice. Let's go Lions. We still balling. We're getting rate cuts though, aren't we? Who getting rate cuts?
Let's go, guys. We're giving out 5,000 on KCEX. Exclamation Wednesday juice. Get in there. Yeah.
Family. No rate cut, still ballin'. No rate cut, still blazing.
How's this sounding?
Make sure you guys are subbed up.
Wednesday juice.
Giveaways are for subs only. Big cheers, y'all.
We got 20 minutes left, man. I'm excited. You guys excited? I'm stoked, dude. Shout out to October. I can't believe the end of the year is already here, man. It's insane.
Crazy. October went by super fast. September went by pretty fast too, though. But time flies when you're having fun, doesn't it?
Crazy.
Get that single frame value yellow retest going on. We got 21 minutes.
If I'm not mistaken,
20 minutes.
that looks like that was a 80% setup today. I mean, it was the conditions, but that was a retest and rejection of previous day value area low.
Yep.
Interesting. As things happen, rotations don't always play out.
It's a monthly VWAP. Shout out to the monthly level.
Oh yeah. Let's go Chili. Let's go Nitrogen. Dom check. Shout outs PSG. Shout outs Coinwise. These beautiful indicators that we are juicing up with every single day. Shout outs KCEX. Exclamation dashboard. If you don't have your UIDs in, you hoeing. Exclamation dashboard.
Nice. Had 3 people win. Let's
You're
go.
live on YouTube. Should I just put an FOMC stream on YouTube? Change the title and the thumbnail.
Mm-hmm. Let's go. Big shout out to San Casper, 55 Vintage, and Groken. Big shout out to you guys.
Congratulations, congratulations, Lions.
Where the gang at? Where you guys at, man? FOMC here. Let's go.
Yeah, who's trying to win some money? Who's juicing and making some money because the math is the math? Just because we're prepared. Shout outs to the grinders. Catharsis. Much love. Welcome. Yeah, Kirby's. Let's go. Up on to 55 Vintage. Mark. Let's go 55 Vintage and Grokken. San Casper, let's go.
Round two. Y'all ready?
Let's get it, let's get it.
Who want to win some money on KCEX? Come on now, let's go.
FOMC Juice, let's go. Shout outs KCEX, shout outs Husey, shout outs Kimba, shout outs Cage. Shout outs to the gang. Much love. Exclamation Coinwise. We can all try out this wonderful suite of indicators. 14-day free trial. Give it a shot. Enjoy it. Maybe you'll juice up enough and want to continue that trial. I know it's worth it to me. And so is the education. Oh my goodness, they got some juice. And they have a juicy promotion going on for the education. That also comes with the pro indicators.
Coinwise.
Yep, exclamation Coinwise. Thank you, UC. Promo code HALOWISE. You can get all the details in their Discord or on their X account. But exclamation Coinwise. Check them out. Juice.
FOMC juice! Exclamation FOMC juice. Let's go. $5,000 giveaway on KCEX today, all day, every day. We're gonna be doing them all day throughout this show today, throughout the FOMC meeting. So you guys stay tuned. We're gonna be trying to give out some money. So if you guys haven't signed up, make sure you go sign up on on KCEX. Make sure you guys update your dashboards in the Kimba dashboard. Let's go. We're just trying to give out some juice to the Lions. If you guys haven't juiced up on KCEX, this is your chance. I'm excited, man. Let's
Crazy
go.
echo.
Echo.
You boys in some things?
Fighting the wave, both sides.
Both sides. Let's go. Who's juicing on these bad lows? Can't lose.
Bad low, gotta take it.
Yeah, clean some of this up though. Yeah, the only weekend low that's left is this and this. Yeah, this. And then we got bad lows down like kind of the major pivot zone. Mid 109s, 110. Oh, it's all over. It didn't go up 2% today in ES. But the day is still young. And all it takes is one thing coming out of JP's mouth and
Good afternoon.
we are so back.
That's it. Good afternoon. And we're cooked.
Look at that gap right here. Almost. Almost. Multiple single prints in a day. Some of you know what that means. One-sided motion, momentum. Let's go Spurgus. Let's go 21 slippage and Redable. Congratulations. Yeah, 999. Let's get it. Shout out to Burgix, Leakwalk. Congratulations to the winners of the 100 Bones giveaway. Let's go, KCEX. Let's go. Let's go. Juice up. Enjoy it. Don't spend it all in one place. Or, you know, trade it and make it into tens of thousands like many of your fellow Lions have been able to do. Let's go. Kolzuki, you're a Kimba NFT whale and lately lucky in winning? I don't know. Juice, do you know anything about this?
The math is the math, the juice is the juice. Oh. No, I think I think it's just your day, Kozuki. I think it's just your time. You know, you've been grinding hard. It's well deserved. Hey, congratulations. Make sure you juice up on that, okay?
Wait, how did you win if
Let's
you
go,
didn't have KCEX? Fill my berries. Let's go. Insistence.
Well, they could still win, and as long as their UIDs are updated, they can, you know, they can claim it. But if they don't have a UID for KCEX and won, they kind of just waste their chance of winning. Ooh, yeah, make sure their UIDs are updated. It's probably still not too late, so make sure you go in there, make sure you sign up, update your UID, and you'll get a chance of winning. So before they get processed, so you probably still have time to get in there.
Let's go, Kolzuki. Market making Liquinia Lions. The bid wall is strong. Anybody know the probability or what they're forecasting the chances for a 50-point cut is?
Mm-mm. What is it, KCEX? 6 to 4.
Two 2.2%. 2.2% chance or probability of no cuts, and they're not even releasing probabilities of anything else. Oh, 0% for a 50-point. Got Joya. Oh my goodness. What would the market do if they didn't cut after 97.8% anticipated probability? Holy shit. Bitcoin's going to 0.
Going to fucking 0.
It sounds like we need to hit the balcony before we get these rate cuts.
For real. No, I think we're going to be okay. What's more important is the tone of J. Powell. Right?
When he says
Good
good
afternoon.
afternoon.
Good afternoon.
The color, the shade of purple tie.
The look in his eyes.
Fredware says, to the balcony!
To the balcony.
To the balcony. Okay.
Get it, boys and girls. Welcome all Lions. We got FOMC. We got some giveaways today. We got promotions today. We got Houston Cage and Mandelo in the house. We're going to juice with the Lions and have a good time doing it. Let's fucking go. Let's go, Ace. Hey, Joopy, how we doing? Paul. Even if you're a new Lion, get in the dashboard. You have a good chance of winning, especially with BLOFIN. Exclamation BLOFIN. I don't know about BLOFIN giveaways today, but whenever they run, you have a great chance of winning if you haven't won with BLOFIN yet. So make sure you get your UIDs in the dashboard and put down some work. Yeah, when we were streaming the presser afterwards, we got cachoyed on the Fed's site, didn't we? We had to like go over to YouTube.
Did we?
I think so.
Can't remember. Ooh, can you rewind this one and turn it up? It's like a jam
Sure
right
can.
here. Let's go, guys. Big cheers, big cheers. Hope everybody's doing good. Shout out Fredward, G Jones, Insistence, Ace. Shout out Ace. Much love. Shout out to you guys. Droopy, Pedro, Bergie, Paul, Liam C, Fill My Berries, Curvies. How you guys doing? Shishibu. We're gonna be doing some more KCEX giveaways. So stay tuned. Make sure you guys update your UIDs in the dashboard. Much love, guys. We also have a game show today. So big shout out to Cyper. Make sure you join up for Cyper's game show. Big shout out to Cyper. Make sure y'all tune in and show Cyper some love. And then we should have some more bright and early Mandelo nerd outs. Bright and early. Shout out to Mandelo. And the last game talent show for the week. So big shout out to the talent show. And then Friday we'll regroup, market close to vibe out, watch some Who Jushin premieres, and kind of hang out. Maybe we have a little extra juice on Friday. Not sure. Working on little surprise for you guys also on Friday. So big shout out to you guys. Exclamation coin wise. They got the 14-day free trial. So get in there, y'all.
That looks about right, doesn't it?
If the Fed
Perfect.
don't cut today, let your patience lead the
one.
way. Don't chase noise, just chart your math. Let the candle light your path.
We'll figure out where to put it later.
Stress, we breathe instead.
Exclamation semi-prepared. We're good now.
Power slow, but we still trust the return.
Shoutouts Joopy. Shoutouts Insistence. Let's go. Shoutouts Ace. Mark, Fredward, Excognitive, Hannah Montana, Kozuki. Yeah, we're gonna watch it on stream, Kozuki. Yeah, we'll see how exciting it is. It seems that the comments are probably going to be more meaningful than what the actual numbers release are, at least based on the probabilities. But the math is the math. We don't try to predict the future, do we? Yeah, a little bit more to fill the gap in CME. Get another gap below. Not the greatest lows anywhere on ES either. You guys want four-way for when the minutes drop? Oh my gosh, we got like 2 minutes. Anybody that wants to do predictions? First 5-minute FOMC candle. And you got 2 minutes to get that thing in. So anybody that likes the Gamba, let's go, let's go, let's go. Shoutouts Kimba, shoutouts KCEX, shoutouts Coinwise, exclamation Coinwise. And shoutouts to Cajun Husey for being here with me, but big cheers to all of the mods, admins, and developers, and a huge thank you to all the Lions. Much love to you all. Let's go. Let's go. Vidal. Oh, Kachoya.
It's how I breathe. Kimba gang, we build on these principles and clean routines. But when they gone, I fall to my knees. I lose control when I don't got math with me. Falling apart when edges a mystery. I lose control when I don't got data to read. No zone to clean. I ain't who I mean to be.
Let's go. I like how I'm always the one with the like the leather jacket, you know. Like that cool uncle that comes every now and then just to kind of hang out.
Swaggin'.
You guys are all nice and spiffy.
Who's nice and spiffy?
You
You're
checked
looking
out
fresh
the
in that
thumbnails
hat.
in the. No, you checking out the thumbnail in the YouTube.
Wow.
You look fly. Look, I even got a nice little haircut. I love it.
Yo. Shoutouts Cage. Shoutouts Husty. Let's go, my mate Nate. Oh my goodness. The Manda level. Let's go. Dude, we talked about it yesterday again, and it juiced it again today. What in the world? Oh my gosh. Oh my god. Oh my god. Kachoya, we're out. Yeah, shout out to Husty Barbie. What's happening? Help me.
Help me.
2 p.m. There you go.
Oh my gosh, what's happening? We got rate cuts. We got rate cuts. We got rate cuts. Let's go. Samurai. The math is the math.
Are you mathing?
4.25 minus what equals 4.0?
Are you mathing?
Samurai, quit playing with me.
Who mathing? Who mathing?
Oh my gosh, S&P. S&P. They're acting like they didn't know it was coming. Look at Dixie with rate cuts. It usually nukes on that. Will it be a debate? Probably from Dixie. Yeah, I guess they got tariffs or something, maybe. I don't know.
Get them with 1,000% tariffs.
Yeah. Yeah, they slid that leverage bar to the max. Insistence. Dude, I know, right? That's awesome, man. Let's go, brother. Yeah, the quizzes are dope. It definitely is helpful to test yourself and to make sure that you know this stuff, isn't it? And then they got points coming for it. I mean, they had points for it, I guess, but they are gonna have a leaderboard and some other things with it. It's juice, and that's just the tip of the iceberg.
They
Yeah,
just
exclamation coin wise.
volume profiles.
Yeah, they had 2 volume profiles videos come out, and they got the pro one coming out, I think maybe tomorrow. Yeah, it's juice, and so much more coming. It's juice. We ballin'! Exclamation! We ballin' on the rate cuts. Cage, you ballin'?
I'm balling. With or without rate cuts.
I'm balding, but it's all right.
That's getting Mandela, bro. That was a good one.
That's
Fuck it.
crazy.
Let's go, Coke Zero. I know you juicing. You always juicing. Much love, brother.
That is good.
A good Mandela, bro. That was great. You're so quick with that. That was crazy.
We're all thinking it. Fuck it. Let's go, Mark. Let's go. It's just my brain is like melting my hair. You know, it's a tough problem to have. The beard grows longer and the dreads get shorter. That's right. That's right. I had like kind of dreads. It wasn't like white boy dreads though. Like it was more just like nappy surfer hair. When I was a youngster. You youthers. Let's go. Exclamation we ball and shout out to KCEX. Let's go. Exclamation dashboard. Big cheers, insistence. Yeah, have you done a bunch of the quizzes, insistence? Yeah, I think we're gonna try and preview some of them. Stay tuned. Not really. It was just like some dirty surfer hair. I was just like lived at the beach. I know. It's crazy. You would not recognize me. Let's go big long. Shoutouts for spreading the love. Get your umbrellas out. Thank you for gifting that sub. Yurtik, you're a blessed one. Let's go, insistence. Yeah. Owner Zero, I think so too. You got 4 of them done in insistence? That's dope. Yeah. Yeah, I think they get harder too, but the videos help.
Where you at on the leaderboard?
Is it showing on the leaderboard?
Yeah.
Insistence, are you in with your name? I'm logged out of everything, so try to see this thing. I want to see these quizzes.
How many points you got so far? Oh, I can see you're 30th place with 420 points.
420 points, dude. You should never do a quiz again. Just get another account. That's first place in my book.
Bibception donated.
Fibception's on there?
He said, shout out to you guys for spending your time here with us. Really appreciate it. Much love to you and all the Kimba Line gang.
Man,
cheers,
big shout out
Fibception.
Fib Session.
What's up, bro?
Hit us
Thank
with
you,
that
thank you.
5.
Congratulations, Professor Lick, for the $100 on KCEX. Big shout outs to KCEX and Kimba for the giveaway. Big cheers to my boys that are sitting in front of you on the screens. Much love to you all. Yeah, this is a big day. We got some rate cuts. We got lots of fun things happening, and stuff is only improving. Got a game show in a little while too. Let's go, Cyper! Looking forward to seeing you in a little while. I'm actually gonna have to run right back to work as soon as we finish. But I'm gonna try and watch as much of the game show as I can. Yeah, let's go. Let's get it, Insistence. Big cheers, Fibception. Papigo, thank you for the resub. 33 months on a 32-month streak.
The debate volume, look at that.
Let's go. Yeah, look at this thing.
Debated, man. It debated, man. Love that.
We're gonna clean it all. We did a full rotation in one candle. Both ways. Here, it'll make it look like it's more significant. It's like 10 points, 14 points.
It's a very indecisive candle, very indecisive.
To learn about indecision candles, check out the CoinWise education and their 30% off promotion.
Let's go.
Yeah.
That was just too natural, wasn't it?
Yeah.
I got a face for radio. Wait, what? Big cheers, boys.
Big cheers.
Yeah, Cyper.
It's all about the data.
Dude, Cyper was putting in work on that game show too, man. He was like on vacation and shit, and he like came home early just for the Lions. Yeah, so you better thank him. Give him some support. Show up for this game show because it's a lot of fun, and he's been putting in a lot of work. Everybody that's involved. And Cage, he put in a lot of work on that thing too, man. It's a lot of fun. I really enjoy it. Yeah, it's no simple task to like come up with something all on your own like that. I'm sorry, what was that, Cage? I didn't mean to cut you off.
I'm glad you like it, man. If you guys enjoy it, make sure you're here. 5 p.m. with Cyper today. We got some rewards going out. Shout out Houston, doing some giveaways with us. I'm sure. Have we run out? I don't think we've run out yet, have we?
Oh no, we got plenty.
Yeah,
Good
so make sure you guys are here. We'll probably be giving out giveaways all throughout the game show too. And yeah, make sure you guys, anybody that's new, I saw a few of you guys. Make sure your UIDs are in the dashboard. If you're not subbed up yet, say something. Show yourself, wave. Say hello. Make sure that you guys are subbed up. Basically $6 to make back 100. It's guaranteed. We're trying to get 10 winners. We can only get one. Kachoya. Big cheers, Houston. Shout out to Mandela, man. If you guys are enjoying the tools, shout out CoinWise, exclamation point CoinWise. You got 30% off from now until November 9th. Make sure you guys use it if you're interested in getting some tests done, some quizzes. You want to test your knowledge, go for it. Climb that leaderboard, show off your skills. Shout out Insistence, I see you out there with 420 points in 30th place, man. I'm fucking Lutuche to that. Let's go. Big cheers.
Yeah, they got
I
a
appreciate you guys.
whole gang of videos coming out. Yeah, they're releasing new stuff every single week. And then it's my understanding that they have a trading journal coming soon too.
Ooh. Let's go. Okay.
There's a little bit of stuff coming out, you guys. Just keep your eyes open. Check their announcements, alright? And when they release some juicy stuff, you best bet Kimba Gang's all over it. We're gonna release some stuff for you guys.
Fibception, it's on the Education Pro Plus plan or Education Plus Indicators plan. Like what is like the terminology? What's it called? But it's the indicators and education combined together. Yeah, so it's all in one. It's juice though, man. Yeah, it's juice. Shout out to Johnny Kinslow.
Man, shout out
Hitting
to
5
Johnny,
lines in the
dude.
face with that gift. Big cheers. Welcome back, Drift Spark, Nub, Love Muffin, Junkie Monkey,
mate
Robin
Nate.
Notch.
Shout out my mate Nate. Hey, my mate
Shout out
Nate,
Johnny
man.
Kinslow. Thank you, man. Get some love in the chat.
Cage is a master at TA as well, Baratina. Probably more so than myself, so I just have a loud mouth. I actually am a very quiet person, but when I get in front of people, I just like, that's my coping mechanism, is just to talk a lot. But Cage is smarter than me, so give him some credit. Give him some credit.
What? That's not true, you guys.
Don't
Cage-
lie to me.
Cage
Don't
does
lie
a
to me.
lot of things. I don't know if he has time to do it. He's helping us hold together the whole thing.
We chilling, we're chilling. It's teamwork, man. We're all lions. You know, if there's anything I've learned, it's never get knocked down, always get up, never give up. Straight up. Be a Kimba. We're all lions, right?
Yeah, we're all here to support each other and all juice. We're all trying to juice together. Yeah.
I'd say there's a talented group of individuals putting together a lot of stuff behind the scenes for the Lions to Juice specifically. Shout out to everybody. Shout out to the entire squad. You know who you are. I don't even have to say it. Never back down, never give up. That's right, Ready.
Let's
Big
fucking
cheers,
go,
brother.
Ready?
Never back down. Never give up.
Never give up. Yeah, fuck you. Big cheers.
Is that a song
Big
or
cheers,
something?
man.
I'm too
Nah,
big of a
to
boomer
me.
to know. I just listened to the new Gucci Mane album. What do you guys
Thank you,
think?
Insistent.
It's actually a really good movie. One of my favorite movies.
Yeah. Let's go, Insistence.
Never back down.
Love you, Ready. Big cheers, man.
My mate
Big
Nate's
shout out
in
to Reddy.
along.
Damn, Insistence popping off, dude. Gifting one left, right, and center, making sure no one's left ungifted. Insistence with a sniper on the subs. Big cheers, man. Thank you. If you guys got a gifted, make sure to say thanks.
Yeah, look at that settlement level.
Shout out to the Lions, man. They're juicing.
Man, I see the hype in the chat, man.
Let's go, Insistence. Big cheers.
Another one to Blunder Pause. We had XBit 1, Blunder Pause, Stan W, welcome back. Lee AMZ, welcome back. Shout out to Insistence, man. Johnny Kingslow with the gifteds today. My mate Nate with a gifted.
Yeah.
The Belly-ash. Wow, thank you, thank you. You guys are popping off. Y'all juice.
Well, my mate Nate, if you look at the Wikipedia page for Big Cheers, I actually don't know. It's just like it sticks. You hear it and then it sticks. I think PSG, right? Cage?
Yeah.
Yeah, I find myself trying not to say it. Like I have to actively try not to say it in like a professional environment. I'm like, big thank you. Thank you, kind sir.
Oh, man.
Have a wonderful day.
You ask me, Big Cheers is like right in the middle of casual and professional though.
It's perfect.
It's like perfect.
Yeah, it's perfect.
Perfect.
Yeah, I used to say cheers. I don't really drink though, so it's like a little bit off, but it's just like for anything. I didn't come up with it, my mate Nate. Yeah, it rubbed off on me from PSG. Let's go, fourth wall. Anonymous gifting a t-shirt. Oh my god. Let's go. Shout out to Anonymous. Make sure you get exclamation enter. Oh, we gotta get another. We're just like looping the same 6 songs, aren't we?
Hi.
I do like that song, but like, we ain't worried. We need to get some whistle beats going. Let's go, ready.
Over there, you see?
Huh? Yeah, I was
Insistence
singing the
gave
song.
another sub.
Explanation point enter.
Ray cut.
This is a rate cuts party, y'all. This is a rate cuts party. I mean, like, if you came for TA, you're in the wrong place.
T-shirt.
We're here to juice and enjoy ourselves. The
I
math
gifted a
is the
shirt and I
math.
forgot to put my name on it. That was me.
Should have used the gifting out. A roided Kimba Gang black T-shirt.
Oh,
Exclamation point enter.
Yeah,
That's
it's a
nice.
swagger shirt.
let's go.
Kustino-san,
Kuznielsen.
welcome back.
Yeah, my main 8. Afnagunka, get it. Let's go, Fredward. Let's go, Cytilix. Let's go, EK. Let's go, Pavel. Inky, let's go. You been nerding out? I know Inky's nerding out. Let's go, Latisse. Xbit. Jay Becker, let's go. The Dirties. We got 12 minutes until the minutes. Oh, what color was that candle?
Big cheers. Positive vibes.
Yeah, we're studying the etiology of Big Cheers when we should be like locked in on the minutes and stuff. The math is the math though. We're prepared. That was a big red candle. So anybody that got your predictions in, we actually had some pretty good showing on that for 2-minute prediction points. Shoutouts to the Bears on that one.
Hey, let's go. Readable.
Yeah, readable.
Readable.
I think it's
Let's
readable.
go, Readable.
Right,
That's
readable.
unreadable. Dude, did he not just win a KCEX thing too? He's juicing.
Yeah, he did. That boy juicing today.
Hey,
Go buy a
juicing.
lottery ticket.
No shit.
Make sure you type in exclamation point redeem. Redeem that thing, man. Get swagged out, and if you really do enjoy the merch, make sure to leave a selfie in the
Let's
merch
go,
channel on
Juicy.
Discord. Shout out Houston.
He sees juice and readable up even more. Let's go. This is his fucking day.
Andy got a gifted. Shout out Houston. Welcome in, readable. Let's go.
That's the kind of days I like. Beautiful.
Insistent still popping off. Got a minigun going off over there. QR Project. Welcome in. Insisted. Big cheers. Thank you.
Let's go, readable. Let's go, insistence. Thank you. Thank you. Big cheers. I know, it's just so natural. I noticed myself saying it too, and it's just like,
who did come up with that?
I don't know, dude. I think it rubbed off on me from PSG though.
God, why'd you do it, PSG?
PSG. Shout out to PSG. Much love. Much love to all of you. If you don't know what PSG is, well, you need to come out of that cave and get in the Discord. Exclamation Discord. Let's go, I19.
PSG, just the trendsetters, dude. Cheers.
It's just a PSG thing, you know. We just doing PSG things.
Yeah, the PSG stand up. Oh my God, they are taking over.
I won.
God.
The gifted to Anataras. Welcome in. Shout out I19.
Shout out to I19.
Yes, there we go. PSG stand up.
PSG stand up. Hey, if you don't know what you're seeing in this epilepsy attack, get your ass in the Discord. Get caught up. Exclamation rewind. We got 3 years of highlights, and we got days and weeks and months of this. If this is your first time you ever been on stream, it's usually a little bit calmer vibes, but this is a big day. This is a FOMC party. And we've been planning and preparing for this for a very long time. So we're enjoying ourselves a little bit.
Is the meeting on already? Are we missing it?
No way. It's
No,
at
2:30.
Yeah, 2:30.
You got 8 minutes. That's why I'm asking.
Oh my God, I'm panicking.
Insistence. It don't stop. His credit card bill
Yeah,
is
I
going to
think
be
we are.
like, dude, you have like 16 single purchases. What is
Should I
going
make
on
some
here?
popcorn? I'll go make some popcorn for the meeting.
Shout out Kozuki. Welcome in. Insistence with another gifted, man. He's juicing. That's what's going on.
He's juicing. He's juicing and he's
I'll
spreading the
popcorn.
love.
Keep juicing.
Get your popcorn out. We're going to get your pillows out. It's actually worth listening to the meeting, even if you think that it's a little bit dull. It's important. Quite
I feel like at this point it's just like a ritual. Like, are we really Kimba Gang if we don't watch the meeting? You know, like we've been doing it for so long.
I know Kimba puts like emotes and stuff over JP's house. I don't have that kind of technical prowess. So
I miss that. Are you really gonna make me vote for Joe Biden?
dude, we need to get that in the thing. Oh my God. We'll get YouTube struck though, won't we? I'm looking for my next song.
Man, who knows?
I'm about to pick it. I'm just trying to find it on here. Here we go.
You got your bingo card ready, dude. We need one of those.
Should really actually create bingo cards. I'm getting bingo cards for FOMC.
Let's get a 2 letters, 1 word in the chat.
Yeah.
Yeah. Yeah.
Yeah, my mate Nate. I mean, we have one more meeting left. I think it's kind of like programmed, but I guess we'll wait and see what the data says. Yeah, the tone is important for sure. Yeah, competition. We could use some new emotes. We will have JP on the screen. Yep, in this 5-minute interim before JP comes on the screen, if you do not have your UIDs in the dashboard, get them in there. You don't even have to depot to win, although you're not going to be able to trade anything if you don't, you know, it's helpful. Like, what are we doing here? We're here to learn how to get better with trading, even if I'm not doing TA right now. We did a little bit of baby thing, 15-second TA. We got a little bit more to go to fill the gap. We got bad lows on CME. And perhaps a little bit lower, there's a second gap. We filled the gap yesterday, the initial one, and then there's a little bit more above. So we have some important levels that we reclaimed and lost at 113.7-ish. And 110, 111 is the next important level, and we're trading a little bit above there. So hold, bullish momentum, and we just got to get back above 113.7, 114. In S&P, I mean, this is price discovery. This is price discovery. Hold settlement, or wick and clean these bad lows, reclaim settlement. Otherwise, like, there is plenty of things in the market right now. That's a good song. Oh, yeah. Right as I said, there's plenty of things in the market. Kachoya comes on. Jury duty? Hey, my mate Nate, if you actually have to show up for it, you can't get out of it. You believe in juror nullification. Look it up. That's an instant send home once you get there. Yeah, somehow always am able to get out of it. Wait, is that a Kachoya? Maybe Band-Aid? Oh, heard about the case in the news. Yeah. Yeah, but they might pull you over to a different one. Yes, extreme bias. There's plenty of ways that you can show that you're a very biased juror. But juror nullification, it's like you automatically are there to disrupt consistency between the jurors.
Kachoy on them hoes. Kachoy long, kachoy short. Market long, market short. Kachoy, that's kachoy, kachoy. Baby kachoy. Sato, that's a kachoy. Bottom short, kachoy. Top long,
I mean,
kachoy, kachoy.
We could turn the timer off at this point.
Kachoy on them hoes. All we know is kachoy, kachoy. All we know is kachoy, kachoy. All we know is kachoy, kachoy. Market makers.
Market makers.
Kachoy. Kachoy on them hoes. Kachoy long, kachoy short. Market long, market short. Kachoy. Market maker, market smash. That's kachoy, kachoy. Baby kachoy. Sato, that's a kachoy. Bottom short, kachoy. Top long, kachoy, kachoy. That's kachoy, kachoy. Kachoy.
Do you like his walkout music?
Kachoy on them hoes. I kachoy all day, all night. I kachoy when I walk, it kachoy when I talk, it kachoy when I spend.
Oh, we gotta make it bigger. Henrik,
yeah, we gotta
subscribe
make it
with
bigger.
Prime. Welcome in. Larson, also subscribing
Do we
with
have
the
sound?
tier 1. 8 months. Welcome back.
No, we don't have sound. No, 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 no. It was working.
Instant consistence actually smacking Afnagunka in the face with a gifted too. Appreciate you, man.
Oh,
The public and
Dumbass.
private sector data that have remained
If it's a
available
new
suggest that the outlook for
window, you just
employment
gotta
and inflation
monitor.
has
You got
not
to that
changed
monitor
much
thing.
since our meeting in September.
There you go.
Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today, the Federal Open Market Committee decided to lower our policy interest rate by 0.25%. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic
how's the sound? Does it need to
developments.
be louder?
Available
Can you make it a
indicators
little bigger,
suggest that
though?
economic
A little bigger?
activity
I
wanna
has
see
been
its beautiful
expanding at a
face.
moderate pace.
See that purple tie?
GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year.
Bigger?
Data
Yeah,
available
that's it.
prior to the
That's the
shutdown
money
show
right
that
there.
growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 0.25 percentage point to 3.75% to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way. to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Get out of the way,
Policy
JP.
is
We
not
just got a
on a
big red
preset
buildup.
course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1.
Was it like losing
Our
eggs, like
long-stated
Kimba
plan has been to
Dilda?
stop balance sheet runoff when reserves
I'll
are
never
somewhat
live that
above the
down.
level we judge
There we
consistent
go.
with ample
Let's go.
reserve conditions.
Woo!
Signs have clearly emerged that we
Let's
have
go.
reached that standard.
Juice.
The meeting
The math is too easy.
And we have seen more notable pressures on selected dates, along with more use of our standing repo facility.
Biddy with it.
In addition, the
Bitty
effective
with it.
federal funds rate has
Get it
begun to
nasty
move
with
up
it.
relative to the
Bitty
rate of
get
interest on
nasty with it.
reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by
They're not dead.
$2.2 trillion.
Because you're not taking.
As a share of nominal
Just wait for
GDP,
it.
our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
So I guess the Cachoeira walkout music was actually foreboding. Sorry, guys.
Chair Powell, are you
Sorry,
uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further
The
reduction
weekly
of the
level
policy
cap,
rate at
that
December
low
meeting
on
is not a
CME
foregone
not dead
conclusion,
yet.
as I've just said. So I would say that needs to be
We're almost
taken on
there.
board. We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their
This is
obligations
good.
to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed.
Let's go, Insistent. Thank you.
Last month and maybe today, I won't.
Here we go.
We're talking about, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook? Or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the
Make it
July
point of
meeting, we
control
saw
tapped.
downward revisions in
my
job
On
goodness.
creation.
Coinbase.
We saw a very
Bad
different
low on
picture of the
CME
labor
dead.
market and suggested that there were higher downside risks to the labor market than we had thought.
Yeah, there's one more
And
bad
that
low
suggested
on
that
CME right
policy,
here.
which we had been holding at a, I would say modestly, other people would say moderately restrictive level, needed to move more in the direction over
That's
time
that next
of
gap,
neutral.
though.
If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it
Valuation
was
back
a
down
risk
to PI level
management.
108. Incoming
And I would say
question.
the same about today.
Yeah, that
It's
108.7
sort of
is
the
not
same
too,
logic. But
nice
as I
of a-
mentioned,
It's not
going
too
forward
far.
is a different thing.
Wow, that was fast though. 109
Claire Jones, Financial
exactly on
Times.
Coinbase.
CME bad
Thank you for
low.
taking this question.
They're fighting it. I
Yeah,
love it. It's policy.
We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about
Getting good.
what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices
This is
related
getting
to
good.
the AI boom? Thank you.
You know, I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's a driving factor. I don't think for anybody. You know, I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment.
Resistance.
We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, you know, some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, you know, that we haven't made a decision about December. You know, I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up
There
on
you go.
QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
You know, that could be one of the factors, but the reality is we've seen, you know, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, you know, the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, you know, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be, you know, to be holding on to get the last few dollars, because, you know, again, the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, you know, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, you know, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby.
Thank you. Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, you know, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, you know, that would certainly play into our decisions going forward. So, and we do have, you know, we get some data. The labor market is a place where we get, for example, we get the state-level data on initial claims, which are sending a sort of a signal of more of the same. We also get, you know, job openings And we'll get lots of survey data. We'll get the beige book and things like that. So we'll have a picture of what's going on in the labor market. And, you know, the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions.
Oh, she's bearish.
And also, how much is that factoring into the debate about December?
Yeah. So, you know, we get like I mentioned, what
She
we
just
get in the
bumped on
labor
her,
area. We get some data in
avocado
inflation,
toast
some
costing
data in economic
$25.
activity.
She is
And
bearish.
we'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's, the meeting's, I guess, 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then, that could be an argument in favor of caution about moving. But we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
One of the Lehman
So
brothers.
I was referring to the discussion about, to the extent it related to December. You saw we had two dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop it, the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right.
The
place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration.
Look at that balance.
In the meantime,
That's a
if
nice
you freeze the
retest.
size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities. And we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle Marte
Yo,
with
can you do me a
Bloomberg.
favor,
How
man,
are
bro?
officials interpreting the latest CPI report?
Go to your 30
So
minutes.
some components came in lower than
On
expected,
RTA?
but core inflation was still at
TME?
3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
Okay.
Okay,
What
so
is
the
that
September,
low on the 30 minute?
CPI report. We didn't
Right
get
here?
PPI after that.
Yeah, what
which
is that low
which
we
is
made?
important for translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be.
109.810.
When we get PPI, there might be
109.810.
some adjustments. But so directionally, you know, it was a little
same
softer
level
than
that we
expected,
pretty
and we
much
always
marked
break it down
there.
into the three components. So basically,
Are you
you've
on
seen
adjusted
goods
right now?
prices
I am on
increasing, and
adjusted.
that's
We got
really due to
2 days
tariffs.
left in the month.
And that's due,
Take
that's
it- take it off
compared
and
to a
look where
longer
it went.
run trend
Yeah.
of very, very mild deflation in goods.
I had that
You
marked
see
That's
too.
moving
shoot.
inflation.
Yeah.
On the other side of that.
Wait, that's
good
actually
news,
crazy.
that housing services inflation has been coming down.
You had that
and
marked
is
too?
expected to continue to come down. So if you
Yeah.
remember,
I don't know when we had it
I have
couple years ago,
literally
that's the
pixel
one that you said
perfect
here.
on
we kept
adjusted.
expecting it to do that. Now it's been doing that for some time, and we'll
It's a
expect to continue that.
trident.
That leaves the
Not
biggest
really.
category is
But that's
services
structure.
other
Unadjusted,
than
it's
housing
pixel
services.
108.880
And that's kind of been
for me
moving
on the 1 minute.
sideways over the last few months. But
With
a
adjusted
significant
on-
part of that is non-market
Adjusted
services.
is to
And
the
we don't take a
pixel?
lot of
Yeah, look
signal
at it on the 1
about the
minute.
tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We
the thing about
estimate,
adjusted,
people
man,
have
you gotta
different
change
estimates of what that
everything.
is, but it might be.
Isn't that
you know,
crazy?
5 or 6 tenths, and so that, you know, if it's 2.8, then, you know,
It's so
core
crazy.
PCE, not including tariffs, might be 2.3 or 2.4.
Anyways, that's
range,
juiced.
something like that. So that's not
Yeah,
so far
that's
from your
super
goal.
juice.
So that, we look at that, and the
$10.
thing about tariff inflation
Two
is,
ticks.
the base case is that it will come and
Very
it
good,
probably
very
will increase
nice.
further, but it is that it will be a one-time
observation.
increase. And, you know, we've been very focused for all of this year at making sure that that's the case and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, you know, a really tight labor market.
Pixel
We don't see
baby.
that. Another could be inflation expectations moving. We don't see that.
Now we're
So
back
I think,
above.
you know,
That's
we're
crazy.
watching this very carefully. I think it's not the case that we're just assuming
they
that
choose.
Dildo
that
from
it's going to be
S&P.
one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn
Just run over all those
services
bottom
inflation,
shorts.
Big
what are some of the
cheers.
things that the Fed could do to address that?
That was nice.
And
That
especially
was
when we're
good.
seeing potentially labor
Shout out to
supplies
everyone that was
Dumping,
prepared
we
from
need
the
to
morning.
start it fast,
the,
fast,
the
fast.
stubborn
Psych.
services inflation that you
Oh,
mentioned.
go,
service
Papua.
inflation, yeah. Well, again,
Papua.
the part of services inflation that is,
Welcome
that
from,
isn't
Barcelona.
coming down as we would like it to is the non-market part of
Great.
non-housing services.
Got
And, you know,
6 minutes.
overall, that's
Before he
just
wraps
something
this up, yeah.
that we expect will come down. The non-housing, the
Maybe I
non-market
read that
part
as
of it should come
Bolkowski.
down. It largely reflects
But you
higher
enjoy your
stock prices
Bolkowski,
and
exclamation
financial
Letitia.
services that are imputed rather than actually
Bol-
paid is
How's
is
the
a big
bowl of
part
the
of that.
Tuche?
But also just, you know,
Okay.
we think policy is still modestly restrictive
Holy
in my telling.
shit.
So that's the kind of thing
Run
that
it
should
back.
lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market.
That is so.
Is because,
Wow.
you know,
One of the two chill.
Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank
Violets,
you. Chris
welcome
Rugaber,
back to
Associated
Twitch
Press.
Prime for 20
So
months.
there's a big investment
welcome
boom in AI infrastructure right now.
Everybody
as you
juicing,
know,
everybody
and
Gucci.
Wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles? How is the
Brother,
Fed thinking about that?
Just accept that AI is the future
So I
and get off your boomer
I don't
horse.
think that you're right, there are a lot of data centers being built and other investments being made around the country and around the world. big U.S. companies are
Let's go, Manaka.
just investing a lot of
taking in the
resources
FOMC
thinking
data.
about how AI,
Yeah, he's taking notes.
which
Go,
is not
Pedro.
based on
Pedro's juicing on
data centers,
FOMC
runs
data.
on
Let's
data
go.
centers, is going to
This
affect
is a
their
family
businesses.
show.
So it's a big deal.
5 months. The Twitch Prime.
I don't think that the
Let's go, Violet.
spending that happens to
Jimmy
build
juicing.
data centers all over the
Jimmy
country
did a
is
thing.
especially interest sensitive. It's based on longer run,
Nice,
longer run
Trey
assessments
run.
that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things.
go.
I
Let's
don't know how those
Got in on that
investments
nice
will work
little
out, but I
level
don't
on
think
E.
they're particularly interest sensitive compared to
get
some
it.
of the other sectors.
And then just a quick
Can't
follow-up. You
lose.
mentioned that you
Juice
do
up,
have
brother.
data that you're looking at for inflation and growth in the absence of government data. Could you give us a
main
sense,
name, I
I
know.
think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but, you know all of these. I'll just mention some of the many, many names.
Go, Pedro.
Price Stats, Adobe, and others. For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the Beige Book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard?
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you
fill
said
the
a
link
moment ago
again.
about a continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys or the Beige Book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it, and that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up in the debate on this meeting, we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to possibly be going up quite substantially, things like that. Has that started to become a factor in your policy discussion?
So those are both things that we're watching very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully, and yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are, if you listen to the earnings calls or the reports of big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower-cost products, but that at the top, people are spending at the higher income and wealth. So much anecdotal data on that. And so we think there's something there.
It's a close below.
So
Thank you. Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in
Shout out
December,
to
you
the
said
longers.
far from it. So if a cut might not be on the
Says
table
Gordito.
for December because of lack
36
of data,
months.
what does
Welcome
the other
to the
concerns
Ninja
then
Club.
stem from? So if it's not lack of data as the reason December is not a foregone conclusion,
Is Brian
what
on?
other
Man, let's
things
go.
could be the concern then?
well, the
36
perspectives
months.
of people on the committee.
He is
that,
now a
you know, we've
ninja.
now moved 150 basis points, and that we're down into you're into that range between 3 and 4, where most many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth, that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there was a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
So on that division, then, you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues.
Nate.
And so we're at a place now where we have in fact cut 2 more times. And we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth.
Let's go, Nate. Fancy.
Thank you so much.
Sorry to hear
Elizabeth
it, brother.
Scholze with ABC News.
Hey, get your,
what is your explanation for why
UIDs
the
in the
job
dashboard.
market is
Start
weakening
winning
right
it back.
now? And what will this rate cut do to
We had
improve
big giveaways
the job
all week.
market?
So I think there are 2 things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration and it has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and the unemployment rate has gone down, meaning that demand for workers is going down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand, and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work is pretty close to zero. So maximum employment doesn't, on a sustainable basis, doesn't, if you're creating zero jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse. So it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools, but others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level. And then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because, you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael McKee from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable and whether it could withstand shocks, right? So, banks are well capitalized. While some households are clearly under stress, in the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. You don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI, of the data center story. I think, you know, people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about, it's not, you know, about 25 basis points here or there. You know, we use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here to, by lowering
S&P?
rates at the margin, that will support demand, and that will support more hiring. And that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, you know, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, you know, I've told you the story. It's a complicated story, but this is the best assessment that we can make. But you know, because there's uncertainty around inflation and the path ahead for inflation, that's why we're going. That's why the pace we're going has been a careful one.
Exclamation data! Exclamation data! Exclamation data! Get in there! Get in there!
Dude, that question.
$5,000 giveaway KCEX.
Victoria Guida from Politico. On AI, I'm just wondering, you know, it seems like a lot of the
KCEX.
economic growth that we've been seeing is fed by investments in AI.
KCEX.
So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different in the sense that these companies, the companies that are so highly valued, actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and you know so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and you know it looks like they have business models and profits and that kind of thing.
It looks like they have it.
It's really a different thing. You know, the investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, you know, is much bigger than that and has been growing and has defied a lot of, you know, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher-end consumers or maybe skewed that way. But the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI. You can point to growth. I mean, actually,
data.
You may be growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened
So
is...
Seema, make
is
sure
that
you're in the
supply of
Discord. He
workers
actually
has
updated the
dropped
lines in the Kimba
very,
Discord.
very
So make
sharply
sure you
due to
are in the
mainly
Kimba
immigration, but also
Discord
lower labor force participation.
under Kimba Den.
So,
big shout out to you. Welcome back.
and that means there's less
Exclamation
need for new jobs
data.
because
We're doing a
there
$5,000
isn't
giveaway
this
on
flow
KCEX. Make sure you
into
guys
the-
are signed
into
up.
the
Updated
pool of
URIDs in the
labor that,
dashboard.
you know, where
Enter
people need jobs.
data! Exclamation data to participate in the
a supply
giveaway.
of workers
Let's go,
showing
let's go,
up
let's
for
go.
jobs.
Ka-cha!
In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. You know, the economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course, that will reverse. But, you know, you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. You know, it'll probably be argued both ways, right? But I've said a couple times here that, you know, if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, you know, there will be an argument. I don't know how persuasive it will be, but there will be an argument that you slow down when you can't see as far ahead.
Congratulations.
Others may argue.
Congratulations to
I'm not sure where this argument comes, but you're
Norcus
perfectly right. That
and
you could also argue things haven't really changed, but you might not know that.
Henrique,
so
101.
I don't know whether we'll face
Let's
this
go.
or not. I hope we don't.
Congratulations.
I hope by the time of the December meeting we're getting
KCEX.
a better flow of data. But if we're going
KCEX.
to have to do our jobs one way or the other.
Okay, I also just wanted to ask a FinReg question. I think several years ago you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? And
did
or are
look
you
hella
planning
nervous.
to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But I look forward to I know those discussions are really just getting going. They haven't come to the point where they're got a whole plan and that kind of thing. So
Congratulations, Norseas and Henrik. Let's go. Shout out to you guys.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, and again, we didn't get the September employment report, payroll report, but we look at, the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, in no story, you can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. And the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular
that we're
section
thinking
of
of
the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing. I do think that people, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable, those two things. Inflation also hurts people on fixed incomes more than other people.
Courtney. Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way.
I feel like he explains this every
that's
meeting.
really all I can say.
Okay, thank you.
What are you gonna do when you retire? Like, dude,
Are you
don't
gonna
fucking
get a
ask him
re-up?
that. It's supposed to be about the
Daniel
rates.
Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this
That
meeting you had
NPOC.
dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is, pretty challenging situation where we have, first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, overall, it's a
You
good
guys are
picture. It's
going
a good
crazy
picture.
in the
But
comments.
in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing, and, as we have worked our way through this process, you would expect that there would be a range of views across
Merci
the committee
beaucoup.
on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are, people who take their jobs very seriously, work very hard at this, and just want to do what's
Dude, you
right
gotta
for the
be
American
kidding me
people,
with
but
this
they have
one.
different views on what that is. And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time
That's
when
another pixel.
we're making quite difficult judgments in real time, and I believe we'll get through this, and I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this. I think it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly since April. And if we do wind up resuming rate cuts at some point, we will at some point. I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under, quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last question.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it
What's up,
poses
Jennifer?
risks to the financial
How
system
we
or
doing?
the outlook for the economy. Is it a warning sign?
So, we're obviously, we watch these things very carefully, credit conditions very carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit, automobile credit institutions having significant losses, and some of those losses are now showing up on the books of banks. We're looking at it carefully. We're paying close attention. I don't see at this point a broader credit issue. It doesn't seem to be something that has very broad application across financial institutions. But, we're going to be monitoring this quite carefully and making sure that is the case.
And then separately, many, you yourself have said that we're in a bifurcated economy right now with high net worth individuals continuing to spend with the lower income pulling back. How
Yo,
much
I
of
gotta hit the
consumer
balcony,
spending
bro.
continuing hinges on the stock market
Wait, you're
remaining
gonna miss
strong?
the,
In some odd way,
Billy
does the
Madison.
market help keep the economy buoyant?
So there's some relationship there, but remember, the more wealth someone has, the lower an additional dollar of wealth matters. So your marginal propensity to consume declines quite dramatically as you reach levels of stock market wealth. So, the stock market, it would affect spending if the stock market went down, but it wouldn't drop sharply unless there were quite a sharp drop in the stock market. People at the lower end of income and wealth have a much higher marginal propensity to consume of an incremental dollar of income or wealth, but they don't have the stock market wealth. So I think it's certainly a factor supporting consumption right now. But you would see it if you saw a material correction in spending, but it wouldn't be. You shouldn't think that it'll dollar for dollar stop consumption, because that wouldn't be the case. Thanks very much.
Let's go, let's go, let's go, let's go. We got one ritualistic thing to do.
I hear my brain.
Oh my gosh, that's the wrong one.
What you just said is one of the most insanely idiotic things I have ever heard. At no point in your rambling, incoherent response were you even close to anything that could be considered a rational thought. Everyone in this room is now dumber for having listened to it. I award you no points, and may God have mercy on your soul.
Kachoya!
Dope.
Let's go. Alrighty. Look, we're like streaming and streaming and streaming.
Big cheers.
Big cheers. And look, that was just a big gap the whole time. Dip the tip to the pixel. How we feeling? Housty, he fell asleep, dude. He was like, man, are they still gonna be asking about AI?
Yeah, bro. What's up with these questions?
What the fudge?
Kachoya.
Yeah. Kachoya. How about that $2,500? How about a $2,500 Kachoya in 5 minutes? We brought a little Vala. Baby Vala. Housty was rolling a fatty. When
Yes, sir. Yes, sir. Skis. Yes, sir. Skis.
Oh, dead. My brain is fried.
Yeah, I'll check Sui real fast.
Everyone got
We
their
saw
levels?
ETH.
Up PSG.
Yeah, big shout outs to the Lions. We're gonna wrap it up in a minute. I'm gonna check a couple levels for everybody. Somebody want to see Sui. I'll check Soul real fast and Hype. And otherwise, tune in a little while for the game show. Dude, it's like so many shows. And tune into the morning, and we'll do like a real nerd out. We're gonna do a morning routine nerd out as well. So bring your thinking caps and your notebooks and your diapers and your alarm clocks, and we're gonna fucking get it. You guys see it, I just don't talk through it. My morning routine entails rolling out of bed, grabbing the bong, pouring the big old cup of coffee, and putting some Jack Daniels in it, eating a couple Adderalls.
Very good, very nice.
Breakfast of Champions.
Let's go. Let's go. Hey, can I give a big shout out to today's giveaway winners? We had Henrik, Norseas, Professor Lick, Readable, Kazuki, Spear Gas, Broken, 5 Vintage, and Buddha's Bong. Big shout out to you guys. It was 9 participant winners for today's giveaway. Big shout out to Manolo. Thank you for having me. Thank you for vibing with us today, Manolo.
Absolutely. Thanks for joining me. Yeah, this was a good time. It was a great time. Thank you for coming on. Really good times. And we're
Yes, sir.
juicing. The Lions are juicing. We're having some laughs and some fun, getting some vibes, getting prepared for our game show.
Shout out to Cyper. Cyper, you ready over there? Cyper.
Yeah, big shout out to Cyber. We got that game show coming up. So big shout out to Cyber. Y'all show Cyber some love. Tune in. Don't miss out on the game show. Make sure you guys submit your CoinWise forms in order to receive whatever giveaway or prize that you win today's game show. So head on over to the Discord, !Discord. And yeah.
Starting in an hour and a half, you guys. If you are not signed up, you're not submitted through the form. Do so.
Yeah, it's holding that level. It did not sweep. It's pretty interesting. But that's the same thing that could be said for ETH and Biddy. Like, it didn't sweep everything. It cleaned a few things. Bad highs, like everywhere. There's your SUI. Hype is like back and like it's so back. It just needs to get above that 48 and then really the 53. Like, you break this, and same thing that's happened in a lot of places. That's a good support zone. It's a big consolidation. Holding these lows, you need to do that. You lose that, we're coming back down. At least to the single print. That's my opinion anyways. And then Sol. 193, that's like the level. It's the most important pivot that we've had other than 220 or 221. That's like the 107 or the 113 that we've had.
Should I call it dude?
Yeah, we'll do a full run through of everything. This is like bad highs everywhere. You know, if we start a reclaim, then it's juice. It's holding value area, so that's good. You need to get above point of control, and I need to get my levels back on so I can have VWAPs once again. I think I like didn't update it or something, but it was like scramble to get a system on to share with y'all. Big cheers to all the lions that are here. If you're trading, if you're juicing, if you took a little bit of an L even, we're all here together, we're supporting each other, and we're all trying to get better. So stick around. It's a lot of fun to be had, a lot to learn. Check out CoinWise, !CoinWise. Check out the dashboard for the stream schedule.
Yeah.
Get your UIDs in that dashboard.
Got a bunch of stuff coming up still this week.
We do.
Keep your eyes out.
Yeah, a lot of things coming out this week from the community. From CoinWise is coming out. I know that. They have a big promotion going on for the education and indicators plan. They have the free indicators trial. Yeah, !CoinWise, shout out calling noob. And you know, we've been doing giveaways on the exchanges all week. Let's go.
Big shout outs to KCEX and BTCC. If your UIDs are not in your profile, do it. Exclamation point giveaway.
Yeah, exclamation merch if you want to be fresh. We had a couple people give out merch today.
You're gonna be live tomorrow in the morning, brother?
I will be. Yeah,
Yes,
we got some
9
drip coming
a.m.
out. But yeah, I'll be live in the morning. Market open, like a little bit of pre-market. We're gonna get it on Thursday, and after Thursday, you know what it is. It's Friday. Monthly close is coming though.
Got
Dude, I
market
just
close
can't
with
get
Houston
over
on
that.
Friday.
It was so funny to me, like when he used to do that back in the day, and I just am like trying to carry on the tradition.
You know, we have after Thursday, Friday. Enjoy. All right. Big cheers, y'all.
Big cheers. Hey, my mate Nate, which song is it? The like the spacesuit like send off song?
Yeah.
That's a banger.
I like that one. Yeah.
Not the nerd one. The nerd one's sick, but yeah, okay. You got the spacesuit one. We'll send it away on that.
Yeah, Mandela's got some new intros coming soon, so stay tuned, y'all.
Let's go. I got some new songs too. You guys saw a preview of it the other day. But yeah, I've been enjoying it. Spaceman David Bowie, let's go. Shout outs Hasta La Vista. All right, boys, you guys ready to send it out, or are you trying to hang out for a little bit longer?
I'm gonna send it. Got some stuff
We
to
can send
do.
it.
I gotta help Cyper, help him set up the game show, get everything ready for the lines in about an hour and a half. That was fun. Appreciate
It was
you
a
getting
lot
up
of
here for
fun.
FOMC,
Yeah,
brother.
thank you guys so much for being here. Really, you guys do so much. really appreciate the entire
Guys,
team,
much
but
love.
especially Cage and Housty.
There's a ton of support today.
Yeah, it's been a great day. It's been a great day. Big shout outs to all the Lions. Big thank you to Kimba. Big thank you to today KCEX, but for BTCC and BLOFIN all week. And of course to CoinWise. Yeah. Big
There's
shout outs
a
to all the
list of
gifters.
support
Let's
going
go.
on. Shout out to Insistence with the fucking minigun that went off.
Yeah,
Holy
it's
cow.
like spraying on them hoes.
Johnny Kingslow with a 5 gifted earlier as well. Much love, you guys. For everybody that resubbed during FOMC, welcome back. We hope you juice up. We hope you gained a lot of data and info from that. If you enjoyed it, shout out PSG. Get in Discord. They nerd out all the time. If you want to see what happened last FOMC, shout out September 17th. Go back, take a look with PSG. Nerd out with them. Much love, y'all. Big cheers. Thank you, guys.
Yeah, big cheers, big cheers. All right, much love, y'all. Tune into the game show in a little bit. I should be their mascot. Oh, for CoinWise, yeah. I'm just a supporter, man. I'm a supporter of nerding out and hard work, and I appreciate everything that it can give you, or that you can do with it. And I love sharing with anybody that wants to hear me talk. So shout outs to you, and shout outs to all the Lions. Much love, y'all. I'll catch you later. I'll catch you in the morning. Hopefully I'll be able to see you in the chat for the game show. But again, big thank you to Cage and Housty.
You can stay up if you like.
No, I'm done.
Oh,
I'm
no?
done.
Oh, okay.
Yeah, I have to go back to work, unfortunately. I know, back to work. Let's go.
Okay.
All right,
Big
much
cheers,
love, y'all.
man. Good luck at work.
Class in session, lines pay attention. Professor Manilow, juice is the lesson. Charts don't lie, numbers show the way. Kimba gang minds turn data to the pay. Grab your notebooks, mark your lines. Patience in the jungle is how we shine. Knowledge is power, math is the key. Every young line gon' learn from me. If lines can't do it, homie, it can't be done. Work, sweat, and grind, the journey's just begun. I'ma elevate the game, show you how it's won. Prepare with the wisdom lines, trades gon' run. Pressure in the candles, the market makers is frontin'. We see through they scandals, prices the box and we puntin'. Bugatti money focus, flexing on my mind. Structure, fibs, and order flow, profile and volume in time. High, he try to laugh,